Thank you so much for joining us on this very special rendition of the bi-weekly update, where everybody on here is under the age of 35, including Lisa. But we're here today, looking forward to being the presenter at this time for what I make up in inexperience. I'll make up with youthful exuberance. So I am looking forward to presenting today, going through what we have, lots of fast facts. Zach and I were kind of going back and forth at the beginning of this. So get ready for a little bit of nervous shakes, some voice cracking, and stick in there with us because we got some good stuff for you. So how this always goes, we want to go big to start the day. And I am so incredibly grateful for just truly the trust that our clients put into us. You know, this is a great example. We're sitting here as being some of the core youth on the team itself. And at the end of the day, the trust that Chris passed along to us allows us to help you all. And so thank you so much for taking that trust and giving us the opportunity to service you in the best way possible. Because at the end of the day, when you're talking about being retired for 30 plus years, you most likely want to have a young advisor on your team to be available to answer questions so that they are there to and through and to the end of your retirement and then there for your children. So love the trust you guys put into us. Love being a part of this team. I'm incredibly grateful for that. So thank you all. Zach, how about you?
Yeah, thank you, Mike. Always a lot to be grateful for, but today just specifically grateful for the kids camp. So I don't know if you guys have seen that through um, your weekly happenings that Ashley and Jenny send out to you, but I've never heard of any financial planning team running a kids camp to share different knowledges when it comes to basics of finances to different age groups, but also some ideals that we hope to instill here at Gentian, like gratitude, or as Chris talks about, living an awful life, an awful. So they'll get a great experience today and maybe a sense of awe as they walk around the farm and listen to Chris and our team sharing some wisdoms, if you will. So extremely grateful for Ashley and Jenny on the team and the entire team for these type of ideas and to really bring as much value as possible to you, your family, to your kids, to your grandkids, and it's really special to be a part of.
No, absolutely. And you all couldn't see this, but we actually had a kid running through the screen here on the grid view that we have. Ryan's daughter is going to be joining in on the kids camp, and it looks like he's moving maybe she's not here, but anyways, Ryan, what are you grateful for? And is it Sydney?
I am very grateful for Sydney, and not to hammer the point too much, but my gratitude today is the kids camp as well. I think it's really special that to be a part of a workplace like this where we truly just want to give back to the clients and to the community, and just the most in the most unselfless way of just trying to help in the best way that we know how by leading with gratitude and some good education.
Absolutely. Thanks, Ryan. Yeah, one of the things that we hear a lot, and this is in kind of general conversation more often than not, is that why don't they teach this stuff in schools? Some of the basic stuff that we go through, how important is that? So starting at ages, you know, the youngest being 5 all the way up through 11 with this kids camp, 14 even, that's getting something ingrained in their brain early on, that idea of saving money and doing good things, and that can help you out to and through retirement, as we all know. So, Michael, what are you grateful for?
Thanks, Mike. Today, I'm just really grateful for the support system around me, whether that be here at the office, at home, or with my friends. Um, you never know what somebody's going through, and just to not judge and not assume things are going well, I think is a important thing to keep in the back of your mind at all times. Nothing specific pointing to this, to be honest, but it's just a nice reminder sometimes to just feel lucky for who's around you.
Grateful for being grateful is what I heard. So, absolutely. You never know what someone else is going through. Lisa, what are you grateful for?
Hi, good morning, everybody. Well, I'm grateful that I got put into this bunch of mix with all the 30-something-year-olds, and I'm the bonus female and the bonus 50-something-year-old. So thank you for including me in this in this batch. I feel like the old lady here. So matriarch, should I say, right, of Gentian. So yeah, very grateful for that and being on this, and definitely everything that you guys have said, the kids camp and everything that's going on, and beautiful day. So here we go. And I'm looking forward to this webinar.
Thanks, Lisa. No, we're happy to be here. You could have ran with the 35-year-old piece. You know, you are welcome to do so. And also, we got to give Michael some credit. Not 30 yet. Enjoy the rest of your 20s. You'll be with us someday. So hopefully, right? But from that standpoint, let's kind of get into it a little bit here. So as always, I kind of want to think about this. Sometimes this turns out to be the pregame show to the Federal Reserve show, right? At the end of the day, Federal Reserve is presenting in just under 4 hours here. I will spare you the minutes and seconds for this one, but just under 4 hours, they're going to be coming out with their statements and how they're going to continue to proceed going forward. Something very unique that when you look at the Fed Watch tool this week and what it kind of shows as the market sort of sets its expectations. And this is this idea of pricing things in, right? It's an odd thing to say because market's still at all-time highs, but what that's showing is that it's starting to get more used to the idea that interest rates could be higher for longer. In fact, when you look at the expectation right now, it's 99.1% is the expectation that the Fed will maintain current rates. Guess what the 0.1% is? For the first time in a while, the 0.1% is actually a hike. Now, we know that our money would be on 99.9. We never know what could possibly happen. Federal Reserve, they act independent from everything. Their goal at the end of the day, and I want to continue to reiterate this is why Powell wears that purple tie, right? So it doesn't have any sort of political affiliation, is that his goal at the end of the day and the Fed's goal in general is to do the best thing for the United States economy and the best thing for the people. So whatever their decision will be, the market's going to take that. They're going to digest that. We're going to get some volatility, either upwards or downwards, depending on what that actually means. And you can bet that it will probably be irrational. So we'll see things like, oh, the economy's strong. We can continue to think about maintaining rates maybe higher for longer. Well, the market's probably going to go down. If they say that the economy's weak, we might be looking at lowering rates. Could see some volatility either way as they digest that. But the idea is that we've been waiting for this rates to drop, gives the opportunity for bonds to start to outperform that were issued before that statement was made. And I want to bring that up too, because this idea of pricing in is that statements are why things move. So we get the comment a lot, what should we do with our cash? Well, we talk about these high yield money markets. It's wonderful that we can get over 5% on what we could get 0.00 nothing 5 years ago on. That's great. But when do we turn that into a more, tangible investment, not tangible, but an investment asset beyond what that is? And when is that decision made? So maybe it's looking at the time horizon. Anything out past 3 years, you can start thinking about that as being something that maybe you could take more risk on. More risk, there's a lot of room for more risk. When you start at cash, we're talking bonds is sort of moderate. Talking stocks is on the higher end of the curve, and even some of the other options that are out there, depending on the cap sizes of the companies invested in. But if you get ahead of that is how you're going to profit on the upswing. So a lot of times, if you don't need this money, yes, you are foregoing for lack of better terms, a very confidence in getting 5% return in the near term. But you could be missing out on that upturn on the stock market. And over the course of time, you'll be very pleased that you made that decision, regardless of what happens on the short term itself. So lots of things to consider, lots of things to digest. We'll bring it to you. I'll be watching to see what the Federal Reserve does. It's a little above our kids' camp grade. We're not going to be talking about the Fed to them quite yet. We're going to wait for those later ages. Maybe we'll catch those juniors, seniors in high school someday. But yeah, so that was my multiple minutes, and those will continue. But a brief intermission from that, I want to bring Zach on the call. Zach, what do you got for us?
Yeah, thank you, Mike. Really appreciate it. We'll just go through kind of where markets are at for the year again, and then Mike and I might try to out-fact each other. So bear with us if we give a lot of data. But over the last quarter, there's been some really interesting things that have come out and a lot of perspective added over the last 10, 15, 20 years as well. So starting with markets, the Dow Jones is up about 3% on the year. Just as a reminder, this is one that the news and the media really enjoys talking about because it's the biggest number. So when it goes down 1%, it's like, oh my God, the Dow's down 400 points. That's completely normal. Even if it was down 1,200 points, that's still completely normal. And kind of something an issue we've seen with the Dow Jones a couple of weeks ago is that it's price weighted, not the size of the company weighted. So a certain company is the 29th biggest company in the S&P when you take the actual size of the company. But in the Dow Jones, it was the 6th biggest, and it was down 20% in one day. So it completely drew down the index. It looked like everything was horrible, and it was really just one company, a smaller company relative to the Magnificent Seven or others that drove that down. So just be aware of that, what the media is showing you, what you're looking at. We like to look at the S&P a little bit more. And the S&P 500 is up about 13% on the year and an 8% gain since May 1st. So since your end of quarter one statement, about an 8% gain in the S&P. The NASDAQ, which is about 50% weighted towards technology, is up almost 16% on the year and 10% since May 1st. The Russell 2000, which is smaller size companies, is pretty much flat for the year, just below about 0.13%, but still 2% since May. And that one, as Mike talked about, is a lot to do with assumptions with interest rates, smaller companies' ability to borrow money. And as an example, this morning in the first hour of this morning, small caps are up 3%. So small caps can change very, very quickly, and we want to make sure to own them. International up about 5% on the year, which is exciting for us to see because international and emerging markets have struggled really since before COVID. And emerging markets up about 5% on the year as well. Fixed income, relatively flat. We'll see what occurs after today and all the perspective that Mike will bring us with the Fed meeting. But getting to our random facts, or Zach's facts, if you will. So this is by no means a recommendation for these companies that I'm about to mention, just amazing with how much they've grown and the size that they are now. So as of market close on the 5th of June, there are now 3 companies over $3 trillion in value, 3 trillion. So those are Microsoft, Apple, and NVIDIA. The 9.2 trillion combined market cap of these is the same size as the combined market cap of the smallest 350 stocks in the S&P 500. So we use the S&P as kind of a metric to gauge how things are going, but really a lot of this return has been from 7 companies, in a lot of cases 3 companies. So it's still with perspective that we take a look at it. The last exact fact, if you will, unless Mike tries to out-fact me, and then I'll try to come up with another one. But even though this has been an unbelievable year for the markets in the first 5 months, a survey was taken in May, and 50% of the survey takers said the S&P 500 was actually down for the year, when at the time it was up over 10%. So just it goes to show perception versus reality, depending on where you're getting your news from, depending on political beliefs, depending on everything else, and sometimes doesn't exactly align what's actually occurring. So just a great reminder there. With that, Mike, I'll pass it back to you.
Thanks, Zach. Yeah, so in my first attempt to out-fact Zach, I'm going to come with a little bit of some information about NVIDIA. But before I do so, I do want to comment on the last thing that Zach said about the idea that the perception is about half of the population of the United States doesn't believe that the stock market is up for the year. And I think that's fascinating. I also think that's a derivative of how many people take the time to actually have investments, who have the ability to be investors and are paying attention to the markets and seeing their returns. Because a lot of people, if they see positive returns, the assumption most likely is that the stock market is also giving the correlation between the equity investments and the stock market itself. So I think it's a very fascinating piece. And that's why sometimes you don't know what you're getting when you speak with somebody outside of the professional atmosphere or that who is an experienced investor. So it's hard to gauge kind of the noise that you hear on the outside. But given the inexperience and that who isn't investing, I think it's very interesting to hear that some think that things aren't going as well. That could also show how irrational the stock market is, which has turned into one of my favorite subjects. So, but anyways, at the end of the day, that quick fact that I wanted to bring to you quick is about NVIDIA. Now, we've heard a lot about this company, right? It's grown significantly in the last couple of years. It was already big before it started growing, already considered a large cap. But Zach, did you know that in 1999, the market cap of NVIDIA was $1.5 billion?
I did not.
In 2014, did you know that it was $10.7 billion? Now, this is a beast, still big numbers. No? So over the course of that time frame, 10 years later, 2014, today, what's NVIDIA's market cap? 2.97 trillion. It is fascinating to see what this company has done and where it's become. And in a lot of different ways, it's another showing of why we own different asset classes. Guess what's a $1.5 billion company? It's a small cap. Guess what's a $10.7 billion company? Well, could be argued to be smaller, but it's actually a mid cap at that point. We recommend to be diversified throughout the different cap sizes. And this is why, because sometimes you catch one of these companies and you give the trust in a manager to continue to hold them. That's why sometimes when you look inside of sort of mid-cap funds and things like that, you will sometimes see, and we will at least, if you ever want to take a behind the scenes look, I'm happy to show you, the fact that some of the companies in there are larger than what you would expect, given that they've made these decisions to hold and let them run. There's examples like that throughout. It's fascinating. And in fact, a lot of mutual funds out there, large cap growth, hold NVIDIA. So a lot of people participated if they didn't. If you want more information about your specific portfolio, please let us know. We are happy to talk about it because everybody's stuff is different and we can share some of that information. So Zach, that was my big fact. Do you have anything to come back with on that? Anything to counter? Shaking his head no.
I think we'll spare everyone for today.
Yeah, this is going to be enough data for everything. Everybody's going to be looking forward to Chris being back to bring philosophy and hypotheticals and probably dad jokes. So yeah, maybe Ryan's got one in his back pocket. I don't know. I don't want to put you on the spot, but yeah. So let's bring Michael into this. He's got some planning ideas. Michael, what do you have for us today?
Thanks, Mike. I'll give everyone a break from the numbers for a bit and talk a little bit more. I wouldn't say philosophy, but when thinking about retirement. So between some things that I've read, things that I've learned, and things I've taken from the team and Chris here, I put together kind of a little bit of a checklist for those gearing up for retirement. We know the baby boomer generation, a lot of people in that generation are approaching retirement if they aren't already. So the first one I would give advice on is be sure that you and your spouse are on the same page about what retirement's going to look like. Are you both going to retire at the same time? Will one spouse continue to keep working? Will you phase out and reduce hours or just fully stop working? On top of that, where do we want to live in retirement? Do we want to stay in our current home? Do we want to move to another state? Do we want to downsize? A lot of questions to think about there. One thing that has been more prevalent lately, at least personally to me, is old retirement savings plans that clients happen to forget about. You may have worked somewhere for a short period of time and had a 401k or another type of savings plan there, or your company was bought out or merged with another company, which created a new plan for you when the old plan could have potentially been forgotten about. One thing that's really important, and I stole this one from Chris, but for the final few years before retirement, to actually practice your retirement budget to make sure it's realistic. Underestimating your spending and spending more than you think could be one of the biggest detractors to having a successful retirement. Another one would be to look into your Social Security benefits if you haven't already. I actually created a login 2 weeks ago. I am almost 33 years, or a little bit over 33 years from being eligible to even take Social Security at this point in time, but apparently I've worked enough hours and paid in to at least have a estimate, even though it looks like a potentially nice number. We know inflation could certainly change that. And the last thing, of course, would be to think about health insurance options, or I'm sorry, health insurance in general. If one spouse continues to work, you could go and take on the family plan of their health insurance. Some companies or employers offer retiree benefits to stay on even after you retire, or will we need to look at Medicare or go to the open marketplace? So just a handful of things to think about. There's a very long list that we could create here as a team, but just wanted to give a few for today. Thanks, Mike.
Thanks, Michael. You tempted me to build off of actually saying how you qualify for Social Security, but I'm going to spare everybody from that because that is trivial, and maybe I will get a point in trivia someday for knowing that. But anyways, but you said something specific that is a little bit beyond not talking about the planning that I did really enjoy. And you said that you stole something from Chris. And in fact, I was on a call with Chris yesterday and I got to hear some of his ideals and different things. And this is a Chris Dotyism. I want to give it to everybody here. But the gift of teaching is that someday that who learned will think it's theirs. And it's a sign of maturity to not allow that to bother you and accept it. That's straight from the brain, the mind of Chris Doty. And he might not even remember saying it, but I've got it right here written down. And so I'd like to share that with all of you. Anyways, I want to bring Lisa into this real quick. She's got something important to say from the operational standpoint. Lisa, what do you have for everybody?
All right, thank you, Mike. I am going to share my screen right now, and then just Peter emailed everybody earlier this week, all of our clients. Raymond James are taking on the responsibility of delivering the ADV disclosure documents this year, and for anybody who doesn't have client access or electronic delivery, we really advise you to sign up for client access. This is the email that Peter had sent that you can see on my screen. Has a little box where you can enroll in client access if you don't have it already. It'll take you straight there, and you can just sign up and then choose the other correspondence to set all of your correspondence to electronic, and then you will not get this sent in the mail. This is a large document. This will be over 100 pages if it comes in the mail, so we definitely advise you to either sign up for client access, and if you have client access, then go into your other correspondence and check it so it's electronic delivery, so you do not get this huge document in the mail. So just wanted to let everyone know that and save some trees there. So all right, well, thanks a lot, and speak to you soon.
Lisa. No, absolutely. And there's a lot of other benefits for signing up to client access, specifically for those who don't have it. There's something called the Client Access Vault, which is a secure portal for you to upload documents for us to receive, also a way for us to send things to you. And we've seen people use it for a lot of different things, even just keeping some of their own documents that we might not actually need. We will have access to if you'd like us to, but you can put those documents in there and have them as a safekeeping. You got Raymond James security around that. And as we've talked about before, one of their highest priorities is client experience and client security. On the experience side of things, client access, like anything else, is a work in progress. There's going to be some things that you'll find in there. And if you have suggestions on how it could be better, let us know, because we can say those things to Raymond James. We've got leverage, being the branch that we are, to be able to give them a little bit of feedback and help make your experience better. So these things can change and they can improve. So if you sign up for client access, want a tour of the features, anything like that, we're all pretty immersed in it. We can all speak about it, and we can show you some of the things that you're able to do that maybe you didn't know before. So just let us know.
Exactly. Great point, Mike. And we actually had that situation this week where I was working with someone that was on client access, and they couldn't figure out why the returns of certain funds were so bad over 10 years. And the example was this small cap fund's down 40%. I'm like, that's impossible. I looked at it this morning and it's up like 10% over 10 years. And then when we looked into it, we found that it is showing the price and not showing when capital gains were distributed or when dividends were distributed. So it was solely showing on client access what the price of the mutual fund was, but zero perspective of cost basis or dividend reinvestment added into that over 10 years. So I told Mike, and immediately he hopped on the phone and got on with Raymond James and started talking through why that is and trying to adjust that. So tremendous point, Mike.
Yeah, absolutely. Thanks for sharing, Zach. And that's basically behind that is that the price return isn't necessarily indicative of what the actual investment return is. If you look at a mutual fund on your Apple, if you're using iPhone and you have their stock tracker, it shows price return. That's not necessarily investment return. So great point. And with that, if you ever have any questions, please don't let it simmer. Don't worry about these things. Ask us. Well, you're welcome to worry, but please ask us and allow us to help alleviate that. So with that being said, I want to bring Ryan in. He's going to tell you what's going on beyond the kids camp today.
Yeah, we do have the kids camp today, but first I want to throw my hat in the ring for a fun fact for the day. So did you know that people actually consume more bananas than monkeys? When you think about it, it makes sense. Now, when was the last time you saw a person eating a monkey? There, so I've been holding that one in my pocket just in case for a dad joke opportunity. But so yes, happenings this coming up here. We do have the kids camp going on later today. It's most of the day, so some of us will be in and out of the office helping out with that. But we do have staff ready to help with phone calls and emails as needed. Flag Day is coming up on Friday, June the 14th. So be sure that you're celebrating our Flag Day celebration this year. Sunday the 16th, don't forget to wish your father happy Father's Day. Any strong paternal figures in your life, definitely include them. It means so much to us when we hear those things. Following that, we have Wednesday, June 19th is the Juneteenth holiday. So our office, along with markets, will be closed on that day. Summer then officially begins on June 20th. I'm sure we've all been celebrating summer already. The weather, I mean, apart from some rainy days, we've seen a good start to the summer, in my opinion. Saturday, June 22nd, our Kristen Ellsworth is celebrating 8 years here at Gentian. Congratulations on that one, Kristen. Fantastic. Love having Kristen a part of the team. Such a wonderful person. And we have Peter Nordenberg celebrating his birthday on Sunday, June 23rd. And then that will be the next Gentian bi-weekly update on Wednesday, June 26th. We have June Birthday Club on Wednesday, June 26th as well. So next bi-weekly update and next birthday club will both be on June 26th. And you can register for both in your weekly happenings email. Back to you, Mike.
Thanks, Ryan. And that's pretty much June, right? So we always want to remind you all to please check your emails, watch for the happenings. That's everything that's going on. Sign up links to join into whatever our events are going to be there for you by clicking on the icons indicated and all of that. So please paying attention to that's a wonderful thing. I want to put some stress on the date Juneteenth. That was a new federal holiday within the last few years. The 19th of June, it's going to feel like a Wednesday to everybody else, but the market and the banks are closed on that day. So we do want to remind you that our office will be shut down. Just want to make sure that that's out there because we have had some confusion in the past why there's nobody there on a random weekday. So seemingly new federal holidays, wonderful stuff. But yeah. Anyways, I want to close out today just with a quick thank you to all of you. Gratitude as we do, how we started, that's how we're going to end. And I also want to talk about something, complications. And this is going to be another Chris Doty-ism, if you will, and something that he's been talking to us about a lot. And this morning might have felt like a complication, and maybe without the guidance and sort of the mentorship that he's given us, we would have had a tougher time doing this presentation. And I want to bring that back on how you can reframe complications as being opportunity for growth, opportunity for a lot of different things. Life is going to throw you curveballs, like me waking up with Zach sending me a message saying, how are we going to do this? Who's going to run it? And giving me the opportunity, which I appreciate. So thank you, Zach, for that. I will say that my heart leaped when I had the opportunity, given the excitement and the nervousness that it created. Complication in my life, it is what it is. You take that, you handle that, you grow from it. I think experiences can be found every single day of how you can reframe your mind around complications and how that will go going forward. So Chris will expound upon that a lot better than I have at some point in the future. I can almost guarantee that, which no matter what is a word we cannot use in this business, is the one that starts with a G. Gentian, though, we'll say that a lot. So coming here from your non-galactic headquarters in just outside of Washington, D.C., thank you so much for joining me. Thank you so much for joining the rest of the guys back in the office in Mequon. This has been a ride, and I appreciate you all being a part of it. So I hope you have a wonderful day. Take care, and we'll see you in 2 weeks.
Thanks, guys. Have a great day.